Welcome to Matters Financial and Geopolitical from a Frontier. Once again, thanks for stopping by. I'm always grateful. It's good to be back. Let me start with a most unbelievable situation in the markets. The pound's flash crash Friday. Have a look at what David Inglis is showing on his charts. Bloomberg is showing a low of about 118 and something, but it looks as if it went even lower. I think the next shoe to drop is going to be gilt yields, which have moved considerably. Have a look at this chart from Jamie McGeever, and I think we're going to see a further massive move in this next. For those who missed the drama early Friday in Asia, this is the chart that David Inglis has put out. Forex Live is saying it looks like an algorithm driven flash crash triggered by a Financial Times article based on French President Hollande's speech on Brexit. Low volumes in the Asian session, it could have forced other algorithms to join in and magnify the fall. It's just extraordinary. The speed of the move looks like a kind of flash crash, some sort of failure. Some traders saw the possibility of human error or a so-called fat finger, with algorithms adding to selling pressure at a time of day where liquidity is typically low. So it is, some banks quoted sterling at even weaker levels, with at least one electronic trading platform recording a transaction as low as 113.78. And according to IG Index, it got as low as 112.03. If you think of that, that's from 126 to 112.03. It's far bigger move than's been currently reported. It's no coincidence that the frequency of crashes and bubbles has risen exponentially over the past 30 years, as pointed out by the late Charles P. Kindleberger in his book Manias, Panics and Crashes. Foreign exchange market is $4.1 trillion a day, and saying that, at a currency that's been widely shorted like the British pound and the Molotov cocktail, and it only takes one wrong trade when liquidity is low for things to run amok. And I kept saying that point that Paul Virilio made: wealth is the hidden side of speed, and speed the hidden side of wealth. And I think this example today of sterling is a classic example. Bloomberg Gadfly is saying flash crashes can be expected when computers play God. Russian market, who tends to be counterintuitive, says another explanation could be if someone already got that NFP report. But it is a sheer nonsense speculation, he says. EU must be firm on hard Brexit, says Hollande. That's seen as one of the catalysts. So really a spectacular situation, unprecedented in what we've seen, really thrown me off balance. Never thought it could go this low. But we're now in a situation where I think the falcon cannot hear the falconer, particularly at the peripheral markets of which sterling is now as it exits the euro. So we've got to keep an eye on that. I was listening to Madame Lagarde yesterday on Bloomberg TV, and she said, my grandmother said everything is better with butter. And she said everything is better with growth. I think the markets are in an extraordinary situation. The falcon cannot hear the falconer. Things fall apart. The center cannot hold. And I think that was the theme of my piece about long-term bond yields. And we've seen dramatic movements, particularly in sterling. Home thoughts: as long as you can start, you are all right. Juice will come. Ernest Hemingway. I must admit, I really do not enjoy hospitals. You are invariably in there because of someone you care about. The spare white fluorescent type light, the machines that blink and beep and tend to achieve a kind of psychological control over me. I was waiting in there for Dad to come back out, and you hear the bleeping, and Dad has been in the Outcome Hospital, and yesterday had a pacemaker put in. That made me think of Don DeLillo. We are not witnessing the flow of information as much as pure spectacle or information made sacred or ritually unreadable. I'm referring to the machines. These small monitors of the office, home and car become a kind of idolatry here, where crowds might gather in astonishment. They obviously do a very serious function. And let me recommend this man, Dr. Jalian Mohammed, who really is an outstanding doctor. And that's clear to me in my interactions with him. And I must say, my brother and I, in a stressful situation, felt considerably better just dealing with the man. An outstanding fellow, and anyone with a dicky heart should have him on speed dial. I've left a link up there. His team are pretty good as well. And it's very difficult when you're 81 years old and not feeling good, and you have to be looked after, and Dad can get annoyed, and really a fantastic team around the doctor as well. And on that note, I'll put up a photograph of a cocktail that gets a final spritz at Mace number 10 in Manhattan's East Village. Donald Trump on the prediction markets is 25 to 29. I think it's a buy. Going back to what we saw in sterling today, I sort of wrote about what I was seeing, and I called it arrhythmic markets. And I said then in August 2014, the signal announcing this new arrhythmic normal was the disappearance of MH370. And I asked, now given this level of arrhythmia, friction, and a kind of unsettling ambiguity, how are we to navigate the financial markets? You see, in the old days, these conditions would have created a flight into the dollar. And interestingly, the dollar has been punching much higher. If things go up, if things tip big, the dollar might soar. They seem to be tipping now. I was thinking of Aleppo, and I thought to myself, well, it's just Benghazi, where foreign jihadists were inserted to lead the rebellion against Gaddafi. There's no difference in Aleppo. Put up a photograph of happier days when the crowd was celebrating in Benghazi. Foreigners in London are horrified by May's immigration vision. It's clear that the Premier has interpreted the UK's 52% to 48% referendum outcome as an anti-immigration message that gives her a mandate to bring in stringent measures to cut down on the numbers coming into the country. She aims to cut net annual immigration to below 100,000 from more than 300,000 currently. Have a look at the actual numbers, and my observations from being in the UK are these. I think inward immigration has crossed the threshold that the local population is prepared to tolerate. And this is the case in many developed countries, and that is clear to me. I remember 30 years ago having conversations with people, and it was then that people were worried. I went back again, and I realized it's gone way over the inflection point. Currency markets, euro, 111.17. Dollar index, 97.01. Japanese yen, which has had a big move, 103.92. Swissy, 0.9824. The pound, 124.58 last. The low it touched is a subject of debate. The Aussie is at 0.7577. Indian rupee 66.845, South Korean won 11.1688, the Rial 322.88, Egyptian pound 8.8815, and the South African rand 13.9352. The key issue today is going to be the non-farm payrolls number. If you're a conspiracy theorist, you're going to think it's a big number, given what the pound and Russian market tweeted. Commodity markets, look at this. This is the Bloomberg Commodity Index taken over a long period. And you can see, even after a small recovery about which everyone's getting excited about, we're nowhere near levels that attained before the commodity market crash. It's worth noting. Gold down 4% this week, biggest fall in a year since just before December's US rate hike. WTI has been on a roll, trades above $50 for the first time since June 24. Let's see if we can hold above these levels. But for now, it seems the path of least resistance is higher. Moving on, emerging markets, Saudi Arabia's post-oil plan off to a rough start in year one, and I think it's going to get rougher before it gets better. The first year of Saudi Arabia's drive to reduce its oil dependence may end with the opposite result. Flurry of cost-cutting measures will likely push the non-oil economy into recession, analysts say. Efforts to manage the fallout from cheap oil gathered steam over the past 2 weeks. Policymakers have suspended bonuses, trimmed allowances for government employees. Ministers' salaries were cut by 20%. The central bank also said it's injecting about 20 billion reals into the banking system to ease a cash crunch. Austerity will help Saudis reduce a budget deficit that reached 16% of GDP last year, but it will also exacerbate the economic slowdown as consumption falls. The hits to households are getting bigger and bigger. Very true. Growing pessimism about Saudi Arabia's short-term outlook highlights the challenge facing Deputy Crown Prince Mohammed bin Salman. I spoke to a number of people, all of whom are offering very high-level advice to the Prince. It was an off-the-record discussion, and obviously adding enormous fees, but not one of them thought this plan's going to work, which was interesting. Let's move on to Africa. Schäuble says G20 to focus on Africa's political risks grow. German Finance Minister Wolfgang Schäuble said his country will lead a push among the world's biggest economies to improve living conditions in Africa on concerns about migration, increased political tensions in Europe. The continent of major concern for political reasons and for economic reasons and instability as well is by far Africa. This follows comments by Chancellor Angela Merkel to Die Zeit, where she said that a stable Africa is strategically important for Europe. She's actually coming to Ethiopia because somebody called from the German TV asking for an interview about it, and I said it's an interesting time to have picked to visit Ethiopia given what's happening on the street in particular. African borrowing levels surge anew. Between 2000 and 2011, the median ratio of general government debt to GDP of 18 major sub-Saharan African countries fell from 80% to 30%, according to Fitch. That was a wave of debt forgiveness and restructuring under the heavily indebted poor countries initiative. Ethiopia, Cameroon, Angola, Ivory Coast alone were excused $20 billion of debt principal between them. As a result, the median debt servicing cost of the 18 countries tumbled from 14.4% of government revenues in 2001 to a low of 4.8% in 2011. However, a fresh wave of borrowing by sub-Saharan African nations has this year pushed average debt to GDP ratios back above 50% for the first time since 2005. This figure is likely to hit 51.4% this year and 53.3% in 2017. Debt servicing costs have also risen sharply despite the concessional nature of almost two-thirds of the fresh lending, stripping out loans to South Africa, and an era of low global interest rates. They are likely to reach 9.1% of government revenues this year, the highest level since 2004. Caution is really needed now. There is no clear trend of stabilization. Two main drivers behind the rise: commodity slump, which has led to a sharp decline in fiscal revenues among exporters, and a reliance by some countries on infrastructure investment to fuel economic growth. Talking about Ghana, who sold a $750 million Eurobond that will be partly used to fund capital projects, even though the government's debt servicing cost to revenue ratio at 27.7% is already the highest among the 18 sub-Saharan countries rated by Fitch. Central government capex will exceed 10% of GDP this year in Rwanda, Uganda, Lesotho, Mozambique, and Ethiopia, saying these countries really should have better roads, bridges, schools, all kinds of infrastructure, but the problem is that the return on these investments in terms of GDP growth isn't strong enough to stabilize the debt ratio. In other countries like Ghana, the problem is excessive use of debt to fund government payrolls, elevated debt servicing costs, which already account for more than 10% of central government revenues in Nigeria, Zambia, Kenya, Uganda, South Africa, and Gabon, as well as Ghana, storing up further problems. Fitch forecasts the debt to GDP ratio will increase in each of the 18 countries covered by Fitch, bar the Seychelles, between 2012 and 2017. The largest increases are expected to be in Mozambique, 60 percentage points, Zambia, 37 percentage points, Cape Verde, 36 percentage points. Exxon is hit with fine from Chad 5 times country's GDP, ordered to pay a record fine of $74 billion for underpaying royalties in the Central African nation, where the company has been drilling for 15 years. Fine is about 5 times more than Chad's GDP. It's simply not credible. Ethiopian protesters ramp up attacks on foreign firms, as a report in the FT. Activists torched a Turkish textile factory and attacked a mine owned by Aliko Dangote, damaging trucks and machinery on Tuesday, after more than 50 people were killed when police fired tear gas and rubber bullets to disperse protests at a religious festival. I saw a video which was actually pointing and counting, and it's at least 6x. The violence comes after a wave of protests this year that were originally triggered over a land dispute in the Oromia region of central and southern Ethiopia. Addis Ababa has responded with force. Activists accuse security forces of firing live ammunition on unarmed demonstrators and say hundreds have been killed in the protests. Washington has called the government's approach to the unrest self-defeating. EU on Wednesday called for the authorities to address the wider aspects of the grievances. Activists and analysts say the attacks on foreign firms are becoming increasingly coordinated. More than 24 foreign companies, including flower farms and other agribusinesses, have suffered millions of dollars in damage in recent weeks, according to Verisk Maplecroft. Juan Carlos Vallejo, co-owner of Esmeralda Farms, pulled out of the country after his business was attacked several weeks ago. Right now, everyone is really scared, he said. We never expected something like this to happen. I don't think anyone is going to want to invest here anymore. Ethiopia has been one of Africa's star performers, recording 10% annual growth and attracting tens of billions of dollars in foreign investment over the past decade. A tightly controlled society with the Ethiopian People's Revolutionary Democratic Front, 4% of the Ethiopian population, are going head-to-head with the majority of the people, during which scores of people were also killed after disputed 2005 elections. I visited not many days after that. We have made clear that Ethiopia's prosperity depends on the ability of the government to maintain a stable and predictable investment climate and to expand the political space, a Western diplomat said. Current protests began in Oromia. Amara and Oromo are frustrated by the political dominance of the Tigray minority. I read somewhere else there's been ethnic cleansing of the Tigrayans out of certain areas. The government has to attract foreign investment to keep the economy growing. It has to provide land and services cheaply. People are taking out their anger on investments by foreigners to undermine the government. Analysts say the Tigray-dominated regime has maintained its grip in part by keeping the larger ethnic groups divided, but they add that now the Oromo and Amara have united in their opposition to the government. It will be hard for the authorities to appease them without making significant concessions. Rashid Abdi of the International Crisis Group said some ministers in the Tigray-controlled military are loath to do this. The protests have now reached a serious level, a different scale, he said. We should not exaggerate and say the government is going to keel over tomorrow, but it portends future trouble unless they get a grip. What's worrying is that so far they haven't. Go back to that piece. The revolutionary contingent attains its ideal form not in the place of production, but in the street, where for a moment it stops being a cog in the technical machine and itself becomes a motor machine of attack, becomes, in other words, a producer of speed. As we look around the world today, we see a battle for the street, from the streets of Bujumbura to the streets of Baltimore. In November last year, I wrote about Ouagadougou's signal to sub-Saharan Africa and concluded that we need to ask ourselves, how many people can an incumbent shoot stone cold dead in such a situation? 100, 1,000, 10,000. This is another point. There is a threshold beyond which the incumbent cannot go. Where that threshold lies will be discovered in the throes of the event. The official death toll from the Bishoftu disaster stands at 52. This is an extraordinary number. Even taken at face value, this makes the deadly stampede one of modern Ethiopia's bloodiest episodes, but we can't take anything at face value. This is a country where information is tightly controlled and where casualty counts are routinely underplayed by government spin doctors. Saying the government is mourning something altogether more precious to it, the precipitous erosion of its authority, which grows more fragile with every new round of demonstrations. Have a look at this. Flowers blooming in the West Coast National Park in South Africa in September. For now, the US position toward Kabila is far more hardline than Western and African counterparts. South African up 1.81% this year, but gold might start to weigh more heavily. Dollar rand around the 1390 level. People are quite constructive about emerging markets again. Nigeria all-share down 2.13% this year. The Ghana Stock Exchange Composite Index is down 11.33%. Mozambique and Eni have signed a 20-year deal to sell BP liquefied natural gas. And the source broke a story that President Mugabe has told Parliament that Zimbabwe's indigenization laws to be amended to reflect relaxed demands on mines and banks. I interviewed the CEO of Standard Chartered yesterday, Lamin Manjang. You'll have to wait for that interview, but he quoted Andy Grove. Success breeds complacency. Complacency breeds failure. Only the paranoid survive. Have a look at this artist's impression of the 67-story Hass Towers, which real estate developers Jababu Village and White Lotus projects are constructing in Nairobi's Upper Hill. Will be the biggest, tallest building built. Seems to be a competition these days. Chandaria Industries is set to build a 5 billion shilling tissue paper manufacturing factory in Tatu Industrial Park. Nairobi all shares down 5.61% this year, but up 6.07% since closing at a multi-year low on 5th September. NSE 20 is down 19.22% in 2016, but up 4.72% since closing at a multi-year low on 30th August. Yesterday, Safaricom closed unchanged at 20. And just to give you an idea, it's up 31.16% on a total return basis this year against the Nairobi NSE 20, which is down around 20%. Kenya Airways closed at a 3-month high of 410, crossing this 4 level where it beats a lot of resistance is an interesting development, notwithstanding the news flow, which has been uniformly negative around the corporate governance issue. Equity was the most actively traded share. It remains 5 shillings above its recent 2016 low of 25 shilling. Standard Chartered unchanged at 180. Bamburi up 2.64%. Transcentury, which has been all over the place, has had 2 limit-up days, but then might just turn around at any moment. Once again, thank you for stopping by. Wishing you a great weekend.